First, Nvidia's chips are now traded on an exchange like barrels of oil.
Then Louis Vuitton and Porsche just made a $2 million car, but they only made 2.
And the most powerful person in the office right now is the summer intern.
It's the golden intern. This is Nick.
This is Jack.
It's Friday, the real Friday, August 14th. And today's pod is the best one yet. This is the Team Boy.
The top 3 pop business news stories you need to know today.
Yeti's last pod before vacay, but not the last episode.
Next week, we are giving you a sneak peek on our new series that we're thrilled about.
Oh, we're going to be back on August 31st, though. Mark the calendars, baby.
So in the meantime, we made this episode our best show yet.
Brightest place in business, Jack. Let's hit our 3 stories. For our first story, we need to talk about GDP. That's gross domestic processors. Because our economy, our stock market, and our politics are all obsessed right now with chips.
The market's not driven by FOMO, though. It's driven by FOMOOCH.
FOMOOCH. But besties and Jack, if we're going to tell the story, can we humble brag about one of the biggest celebrities out there that we know?
Yeah, the guy who invented the term FOMO.
We know him. We're friends with him. He's our buddy.
Patrick McGinnis. He actually advised us when we sold the company to Robinhood.
So he invented the term FOMO, true story, back in Harvard Business School. But we also know the guy who invented the term fear of missing procurement.
That would be Eric Woodring, currently an analyst at Morgan Stanley, formerly a football teammate of mine at Middlebury.
He was a teammate. Well, now he has diagnosed the tech industry as having one particularly huge fear.
Fear of missing procurement. Fear that they can't buy enough memory chips that they critically need for their data centers and the electronics they're selling.
Because reminder, your car, your fridge, your sweat-wicking smart sweatpants, and data centers, they all are now filled with memory chips.
But we have a better term for the fear that you can't get the memory chips.
Yeah, you want to share this with the Yetis, Jack?
FOMOOCH.
FOMOOCH.
Fear of missing out on chips.
FOMOOCH. It's just fun to say also, by the way.
Because Morgan Stanley and JPMorgan say that our economy will be short memory chips at least for 2 more years.
Oh, whip open the Hoarder's Almanac, Jack. We got some hoarding going on, man.
Tech companies know that we're short on memory chips, so they're hoarding as many as they can get right now.
Which is driving prices even higher. And the result is you pay more.
There have been $100 price hikes on video game consoles, computers, phones, and we're probably going to see more price hikes next year.
And all those price hikes are powering 1,000% stock market growth for the memory chip makers out there.
Like Micron and SanDisk.
Okay, so pause the pod. Jack, memory chips are insane.
But what's happening with processing chips is insaner.
Oh, open up the bag of chips. What's going on, Jack?
Remember the housing market crash in the mid-2000s? It was brutal.
Yeah, it was driven by mortgage-backed securities.
Well, this week, BlackRock's Larry Fink announced a new thing. Data center-backed securities.
That's right. A titan of American finance just boasted about this new financial engineering.
Because we told you earlier this week, a bunch of Wall Street firms did a deal with Nvidia to build $500 billion worth of data centers.
But now, Jack, they're slicing up the ownership of those data centers into bonds that anyone can buy.
And as long as tech companies pay those data centers to compute their AI, then data center-backed securities will pay interest to the owner.
Just like mortgage-backed securities, but with giant computers as the underlying assets, not houses.
Okay, so even wilder than data center-backed securities.
Oh, what is it?
AI compute futures.
That's right, because Chicago's Commodities Exchange just created this other brand new financial product as well.
Yeah, we're a little nervous by all this financial engineering.
Yeah, this one treats digital processing power like it's a physical barrel of oil.
Like a commodity.
And each compute contract would represent 1 month's rent for an Nvidia H100 or Blackwell B200 computer processing chip.
It's wild. And it's all driven by FOMOOCH.
The fear of missing out on chips.
Whether you're a tech company who needs chips for your product or an investor who needs chips for their portfolio.
FOMOOCH. So, Jack, what's the takeaway for all our buddies FOMOOCHing over there?
GPUs matter more than Hormuz.
Yeti's capitalism was articulated by Adam Smith 250 years ago by this key phrase, the invisible hand of competition.
The invisible hand. It's a reference to the forces of buyers and sellers that result in our market price.
And we estimate that there are 1 million forces affecting the market. You got business investment, international trade, innovation, productivity, government policy, weather. That's a factor, Jack.
But right now, there's only one force that matters. AI. It overwhelms every other force in the economy.
Follow us on this one, besties. The war in Iran, it's not solved, but it doesn't matter to the markets right now.
Consumer confidence is low. That doesn't matter to the markets right now.
Despite all of that, our economy is still growing, and that's thanks to data centers.
As we enter our 2-week vacation, here's the status of the market and the economy.
You see, interest rates, inflation, taxes, tariffs, none of that's moving the market right now.
If you're involved in AI, you're growing. If you're not involved in AI, you're probably flat or down.
And so, Jack, what is Nvidia in this analogy?
I don't know. God.
Yeah, it's affecting everything. Because in our AI-dependent economy, GPUs matter more than the Strait of Hormuz.
Our GDP, that term really stands for gross domestic processors.
For our second story, the Monterey car show just unveiled a Louis Vuitton Porsche.
Yes.
Yeah.
And even though it costs $2 million, you can get in on this billionaire garage trophy.
And Jack and I will tell you how. But first, let's stroll back down memory lane, Jack. Growing up, do you remember the Eddie Bauer edition? Was it a Ford Explorer?
It was. I'd
a
seen
Land
it at the
Cruiser.
ski resort. Or how about the LL Bean edition?
Yeah. What did both of those signal when you saw them?
I'm all-wheel drive and classier.
Yeah, my boots are waterproof, and I keep them in the pool house.
Well, there's now a Louis Vuitton edition Porsche.
What does that signal,
It
Jack?
signals, move your Subaru because that's my valet parking spot.
I think it signals, move your Subaru because my helicopter needs to land here.
But guess how many of these new Louis Vuitton Porsches exist?
2.
Just 2.
That's it. It's the biggest and smallest collab at the same time.
And these 2 luxury Louis Vuitton edition Porsches were made by Singer.
And now, besties, if you're a Porsche person, then you know who Singer is.
It's a 17-year-old garage in Los Angeles that refurbishes and luxurifies vintage Porsches.
Yeah, it's kind of like Exhibit, but they don't pimp your ride, they pimp your rolls.
No, they only do Porsche, actually.
Wow.
Yeah, Porsche.
But this time, this custom shop got the French luxury house Louis Vuitton to hand-stitch the interior.
Handcrafted wood. Luxury leather interior that looks like their famous handbag.
The buckles, they match the Louis Vuitton luggage. Same buckles.
It's basically a handbag that you can sit down in.
Yeah, it goes 0 to 60 in 3 seconds. The chassis, 24 karat.
This thing is friggin' gorgeous, by the way.
Okay, but here's the problem, Jack. I mean, only 2 of them were made.
That's right. And Singer presented those 2 this week at the Monterey Auto Show.
And now to sprinkle on more context, Yetis, Monterey, California, that's where Big Little Lies was filmed.
In Monterey, the nannies have Swiss bank accounts.
And the price of each of these Singer customized Porsches is $2 million.
Or about 20 Mercedes.
But we should point out that Louis Vuitton is a publicly traded company.
So any of us can invest in Louis Vuitton.
Yeah,
one share is $106.
That's a lot more reasonable. Or, Jack, you could make a paycheck from this collaboration.
That's right. The ultra luxury sector that gets women like Nicole Kidman interested in Monterey, California. It's extremely labor intensive.
Handcrafted is the marketing word that gets billionaires to spend millions these days.
And the surge in demand for trophy items like this, it's actually created a shortage of skilled craftspeople.
So even if you're not a Monterey cajillionaire, the industry is demanding skilled craftspeople right now at all-time highs.
And Singer has done exactly that. They use their niche craft to turn a $100,000 vintage Porsche into a $2 million ultra collectible for a huge profit margin.
Singer is making more money than Louis Vuitton on this thing.
So unfortunately, only 2 people on Earth will be able to own these Louis Vuitton Porsches.
But robots didn't make it. 100 humans with skilled trades are the ones who made it.
And anyone can invest in the 2 stocks that made this collab possible.
Even Nicole Kidman wants to do that, Jack. So what's the takeaway for all our buddies looking at the Louis Vuitton Porsche?
It's the economies of scarce.
Now, Yetis, Jack and I are fans of abundance thinking. In this economy, we need more of everything to lower prices, like on houses.
But if you're a business building physical things, abundance is not the best business model.
Well, funny thing, Porsche, the other company in this story, they just realized that after 95 years in business.
Because under Volkswagen, a mass market car company, Porsche increased the volume of Porsches they made each and every year.
Yeah, Volks, they maxed out Porsche's numbers, making 320,000 of them in 2023. Can you sprinkle on the context, Jack?
That is 25 more Porsches rolling off the line every year than the number of Ferraris.
And that diluted the brand. And Porsche stock has crashed since
There's
then.
too many Porsches.
There are. But since spinning off from VW in 2022's IPO, Porsche now has a new operating principle.
Value over volume.
And we noticed that Porsche said value over volume 5 times in their latest Porsche earnings.
And they've reduced the number of Porsches produced for 3 straight years. The goal is to restore their pricing power.
So besties, economies of scale can be a virtue, or it can mean you're competing with China on price.
That's why we're seeing an emerging business model to avoid a price war with China.
Economies of scarce.
Now, a quick word from our sponsor.
For our third and final story, never before has the summer intern been a more powerful force in the office. It's the summer of the golden intern.
The numbers show it.
They
And
do.
we've got an idea to help every company benefit from this.
Oh, happy intern season, all those who celebrate. It's over before you even know it, Jack.
Right now, an intern is doing a final presentation to the CEO, who was in the Hamptons all summer.
Can I put this on my resume, please?
Yes, definitely put that on your resume and embellish it.
Oh, it's also corporate America's annual tradition going on right now, Jack.
You splurge on one last intern lunch with about 43 cupcakes.
And then you go to Phoebes and put the whole thing on the company tab.
But interns, they're becoming an endangered species.
That's right, Jack. The number of intern openings is down 16% from last year, and it's fallen every year for like 4 years now.
The result, it's actually 10 times harder to get into Goldman Sachs' internship program than to get into Harvard University.
Because there's so few spots, a 0.7% acceptance rate just to get into Goldman.
Now, one reason there's so many fewer interns is that every company has to pay interns these days.
Right.
For equity reasons, unpaid internships, they're kind of gone.
Yeah, reduce the number of spots. Oh, and AI has been eliminating the number of entry-level jobs out there.
So fewer interns are needed in the job pipeline.
AI can summarize the data in a presentation, a job the intern used to do, and then the DoorDash delivers the Starbucks.
But the flip side of fewer interns is a positive phenomenon.
That's right, Jack. Fewer internships, but more powerful interns.
Because if a company is hiring an intern these days, it's to do more meaningful work.
Jack, it's no longer the gopher rolls that we had to do. You know the ones?
Go for this, go for that.
Pick up the sweet green for the CFO ASAP, please.
According to the Wall Street Journal, interns are in their influence era.
Fewer interns, but doing more employee level work.
One key reason interns are getting more powerful is the gap.
The generational knowledge gap is what we mean.
Today's college kids are more fluent in AI than veterans in the workforce.
Yeah, because interns these days, they tested chatbots on the term papers and had Claude plan their class schedule during the school year.
There's no better use of an AI agent than organizing the sorority rush by their zodiac.
Yeah, it knows the Leos out there. So, millennial middle managers who still think Slack is cool.
And boomers who still type with their two pointer fingers.
They both want a 21-year-old to train the office on AI.
It's better to look stupid in front of the 21-year-old than in front of the whole office during a presentation.
Jack, we automate Carolyn Accounting's Excel sheet already, please?
Plus, 20-year-olds are fluent in the language of likes.
Right. So, like, the social team is going to feel less lost right now with these golden interns.
The Wall Street Journal interviewed one intern who the company flew to Paris to lead a social shoot.
Jack, did your German bank ever fly you to Paris on a whim?
Yes, but not till I was like 26 and I'd earned my dues.
Exactly.
And we went to Frankfurt, not Paris.
Because that 21-year-old's manager asked her, here's my idea. Is it giving riz or is it giving cringe? The idea depends on it.
Only a 21-year-old can answer that question.
And guess what, besties? Now we can actually see the value of these golden interns in the numbers.
2 years ago, according to the National Association of College and Employers, 51% of interns got a job offer at the end of the summer.
But last year, the rate who converted to full-time employees jumped to 63%.
You don't need intern Ian to pick up Starbucks or scan files anymore. We have a bigger idea for your intern.
Yeah, Jack and I got a bigger idea. Get this. Jack, what's the takeaway for all our buddies interning with power?
You need a Gen Zer on your board.
Yetis, Jack and I have mentioned this once before in the pod, but now we are stating it as an official takeaway.
Every board needs someone 30 or younger on it.
That's right, because the challenge in America right now is how the oldest generation is still in power, in politics, in CEOships, in real estate.
It's all boomers. So the challenge is for the rest of us.
But one way that we think this group can keep power, but also let younger generations in, it's this.
Add a new age to your board and make that new age a Gen Zer.
Gain a fresh brand perspective, add an AI native, understand a different demographic.
And cover cultural blind spots from conversations happening on social platforms you didn't even know existed.
Because these days, the comments are the content.
The golden intern. It proves there's demand for younger generations, but let's institutionalize it.
Institutionalize it. Besties, it's time to add Gen Z to your board. Jack, could you whip up the takeaways before the vacays?
Porsche and Louis Vuitton collabed on a $2 million ultra collectible car.
Only two of them, but we need abundance. Yet profits are coming to the economies of scarce.
For our second story, our economy and stock market are driven by FOMOOCH.
FOMOOCH,
Fear of missing out on chips.
FOMOOCH, because GPUs matter more than Hormuz.
This year, summer interns graduated from gophers to golden employees who understand AI and social.
So it's time to put Gen Z on your board.
But besties, this pod's not over yet. Here's what else you need to know today.
First, remember the Los Angeles Lakers sale we told you about yesterday? All-time high sports price of $12.5 billion.
Well, the seller was Mark Walter. an insurance billionaire under investigation by the FBI.
So this explains the sale so fast. It turns out he was kind of desperate and he needed cash to cover liquidity.
So Bob Iger and Jared Kushner made an offer and gave him 72 hours to respond.
That's right, $12.5 billion to Mark. Take it or leave it. He did the deal over a weekend. No bankers needed.
Although it sounds like they overpaid because he was in a federal investigation and needed cash now.
Would have taken $1 billion, guys. Would have taken $1 billion.
Second, 2 big IPOs may happen over the next 2 weeks while we're on vacation.
Both of them affect your wardrobe. First, it's Shein, targeting a lower valuation of 30 to 40 billion bucks for their IPO in Hong Kong because fast fashion has slowed down.
Meanwhile, Men's Warehouse may IPO while we're gone. They're planning 500 new stores because men's suits are surging again.
I mean, Jack, I can't believe we're saying this. Shein has lost its shine, while suits never been cooler.
And finally, we got a new wild all-time high, rent. It's the worst all-time high.
Yeah, rent just hit a record $5,000 in Manhattan for a single one-bedroom.
$5,000 for a few hundred square feet and a constantly hissing radiator.
It's up 6% from last year, twice the national average.
And Nick, 5,000 is the median one-bedroom in Manhattan. The mean is $6,665.
Okay, can you share that stat you discussed?
$6,665. That was the final rent you and I paid when we shared a 4-bedroom with 2 other guys in 2014.
Yeah, in the East Village, we paid the same price for a 4-bedroom as a 1-bedroom today. Now, time for the best fact yet. This one whipped up by Jack and I before we head out.
Your emoji are making you look old.
And we just got the data on it.
2 years ago, the most popular emoji worldwide was the laughing emoji.
Oh, okay, but what was the most popular one last year, Jack?
The crying emoji, which is also kind of laughing.
And the reason why the top trending emoji changes every single year?
17-year-old girls.
That's right. According to the New York Times and Google research, whatever emoji 17-year-old American girls start using,
specifically when they're laughing?
Yeah, the rest of the world and all age groups eventually start to use.
But once everyone starts using that emoji,
then the 17-year-old girls stop using that emoji.
So you know the skull emoji, which at one point you posted in reaction to something being funny?
Well, 17-year-old girls started using that emoji back in 2021.
And it hit peak overall usage this year in 2026.
But 17-year-old girls stopped using it 3 years ago.
When it comes to emoji, teen girls set the tone. Again, another reason you need a Gen Z on your board.
Yetis, you look fantastic over there. Jack, you are pre-glowing right now. Before you put on the SPF, you're pre-glowing right now before the vacation.
I just really hope this camping trip works out.
You don't sound confident. I'm not going to lie. You don't sound confident over there.
I haven't camped since 2019.
Well, I haven't camped ever, so I'm not confident. Besties, if you're going somewhere, celebrate the wins. We want to hear it. Drop it in the comments.
Yetis, we'll miss you while we're gone. We hope you get some time off too. And let us know what you think about the content we're testing out on the feed next week.
And while we're away, grab tickets to our live show because we can't wait to see you when we're back. Tickets in the episode description and tboypod.com.
That's all the goodbyes, Nick. We'll actually see you on Monday.
Yeah, we'll see you on Monday. In the meantime, celebrate the wins. Can't wait. And before we go, a happy birthday to legendary Yeti Aziza G. She got a birthday and an engagement to Leandro over in New York City.
Congratulations to CO and Wenbo, who both have birthdays and got engaged in Hawaii.
It's engagement season, and Ben Ransom from St. Paul, Minnesota is prepping for the marathon with a birthday.
Happy 22nd birthday to Saya Patel in Cincinnati, crushing it in social media.
And Andrew Gregory enjoyed the birthday over in Chicago doing logistics.
Happy birthday to Andrew Piasecki in Florida.
And Dylan Steinfeld's got a new birthday and a new crib. It's Leo season, baby.
Happy birthday to Riley, turning 23 in Disney.
And Christine Durham enjoyed the birthday down in Florida.
Happy birthday to Josh Wilmore in Charlotte, North Carolina.
And Marla Markowitz, happy birthday down in D.C.
And Chelsea Williams, the twin mom, is turning 36 in Mesa, Arizona.
And Kendi Gatobu just hosted her first lemonade stand during the World Cup final, made $200, but hasn't reimbursed mom and dad yet for the supplies.
I think you gotta
it's seed funding.
Just take a 100% profit margin on that one.
And Rachel from Colorado, we missed you at the photo shoot today, but you are here in spirit. Can't wait to catch up soon.
And a big shout out to Lance from ATM. I'm wearing Lance's shirt right now. Yeah. Best t-shirt I've ever worn, and I'm wearing it later today at the photo shoot.
And Meredith Kism's got a new job in Alabama, but she's a Yankees fan. That's wonderful.
And a big shout out to Nina, who Nick and I just gave a big hug to in the Ferry Building. She's a huge fan of The Best Idea Yet.
And to the Miller girls of Woodlands, Texas, congrats. They're going off to college in France and University of Texas, Austin.
And happy 17th anniversary to Ashley and Alex Kelly in Longview, Texas.
And a special shout out to my mom, who's moving on from this incredible office building that she had for the last 20 years. Had so many good memories there, but so many cool new ones coming, Mom.
And to anyone else celebrating something today, make it a T-Boy.
Celebrate the wins.
This is Jack. We both own stock in Robinhood, and my father-in-law owns a Porsche that I'm pretty sure he's skipping me in the will and going straight to Y.
You're never going to drive that thing.